Hello everyone, thank you for joining us today and welcome to this educational presentation of 3 key strategy rules. I'm going to give you 3 of the rules to one of our most consistent strategies today, a strategy that is going to be offered in our new stock trading college. For example, if you look at this example here in UPS from just this past week, the 3 rules I'm going to be sharing with you today would have been able to generate a buy signal right here when it looked as if the market was really not doing anything, and 5 points in 1 week were later generated. So these are great rules that you'll be able to apply to any method, any technique. And once again, as I stated earlier, this is just the tip of the iceberg of what we're going to be presenting in our Elite Stock Trading College, which actually starts in the next few days. So this is your last chance to jump on board. We're going to have live classes. You can be a student of mine asking me questions live in the online presentations, and you can learn what it's taken me roughly 30 years of trading to accumulate. So welcome once again. My name is Steven Primo, president and founder of Specialist Trading. I've been trading for 4 decades now. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist, meaning that I made markets. I wasn't any more special than anyone else. A specialist was the title given to a trader who made markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell any particular issue, you had to go to the trader who specialized in that. So my background is in stocks. I know just about anything and everything there is to know with stock trading. I traded through the crash of 1987, the bull market that followed. I've been in straight up markets, straight down markets, sideways markets. I've traded just about every system, every strategy, every method. So in my 40 years of trading, I really know what works in terms of being consistent, and I know what doesn't. So the Elite Stock Trading College, which starts in a few days, it's what's going to give you basically the best of the best. These are the methods that I feel are the best for any type of stock trading. And this is regardless of whether you like to trade daily bars, weekly bars, or even intraday trading. So once again, this is all going to be offered through Specialist Trading and my sister site, Pro Trader Strategies. And what I'm going to be sharing with you today are 3 of the rules to one of our most consistent strategies that is actually going to be offered in the program. So this promises to be a great presentation today. Get out your pencils and paper. But before we begin, as always, we're required to show you this by law. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results applying these 3 basic rules. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So once again, as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite all of you to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. You may want to copy that down or write it down. I post different information on a daily basis, anywhere from signals that our strategies have actually generated to just little bits of wisdom along the way. For example, one of our strategies that's going to be in our course today was actually posted a sell signal. With the market being up today, it posted a sell signal and it actually has gone down. So that would have been a nice trade today. And once again, we teach you all the rules. These signals are just for educational purposes only. They're not to be taken blindly. We want to teach you how to spot and identify these on your own. So as I stated just a few moments, we are all about teaching you, and that's what we're going to be doing in our college. As you can see, my goal is not to force feed you signals. My goal is not to tell you what the perfect market is or what the perfect time frame is or what the perfect indicators are. I know a lot of other websites and educators do that. But in my 40 years of trading, I have found that that's actually a recipe for disaster. In fact, that is one of the main reasons why most traders are unsuccessful. It's been estimated to roughly 80 to 85% of all traders fail. And they don't just fail over a period of 5-10 years. They fail usually within the first year of trading. And I think most of it relies on because we are giving your power away. Yeah, too many traders, myself included when I first started out, the first thing you want to do is follow someone who's been trading for a while, has been semi-successful, some type of a mentorship. But then we want to end it right there and just simply mimic whatever they're doing. I know I tried to when my mentors took me aside. They saw I was struggling tremendously some 40 years ago. My first year or 2 on the floor, I couldn't make ends meet. And so they took me under their wing and showed me everything that had made them successful. And these are the same things I share with all of my students and members. But the first thing I wanted to do was I wanted to say, well, listen, why don't you just tell me what you're buying or selling, and I'll just buy or sell those things too. And their answer was, Steve, that's not how you're going to learn. You're going to turn that into a crutch. And then when you finally have to go on your own, how are you going to trade? You're not going to know what to do. And it comes from really a sense of just not having enough experience and not being told the right way to trade and not having enough confidence in yourself. So this is my goal, not to force feed you signals, not to tell you what the best time frame is, not to tell you what the best market is, not to tell you what the best stock to trade is, but to teach you how to trade. That's the same edge that was taught to me. This is a specialist edge, and this is what I feel has been able to sustain me going on 40 years now. So hopefully we'll be able to teach you these things that I've accumulated in 4 decades in roughly 6 weeks in our college, and then you'll be able to sustain yourself, hopefully 40, 50, 60 years if you'd like, okay? Now, I'm going to give you a lot of great information, but as always, since this is going to be an educational class today, I love your questions, but please wait till the very end to ask any questions. I know a lot of webinars that you go to and attend, they stop every time there's a question placed. And if we do that, we have so many people in our class today, we may be stopping every couple of minutes to answer a question, and we'll never get through the end of this. I don't want this to drag on to be an hours, 2 hours, 3 hours. So in order to make things go smoothly and to get through all the information I want to give you today, please wait till the end to ask any questions, okay? The only question I will answer is the most common, and that is this being recorded? Yes, it is. So if you're having technical difficulties or if you have to leave early, you can't stay for the entire presentation, Pro Trader Strategies will furnish you with a link if you request a link, okay? All right, so once again, if you just happen to join us late, kindly wait till the very end of the class, just about another half hour or so to ask any questions. All right, so I'm going to start off with sharing you with what I learned trading on the floor of the exchange. Because remember, I started trading in July, I believe, 1977, and I was green to trading. In fact, I had no background or education. I didn't go to a business school or anything like that, so I didn't know anything about the stock market. I was on the floor. I wanted to start learning how to trade. I was an apprentice under a broker and some other specialists. And I struggled tremendously. I was doing all the right things. I was, at the time, we didn't have webinars or signal services, but we had subscription services. So I subscribed to all the newsletters, all the trading gurus. I was looking at all the news, every company I was following. I knew all the earnings estimates. I knew what they were based off what the company was doing, how well it was, who the CEOs were. I was listening to all the technical indicators as well. I had about 10 to 30 indicators plotted on my screen. And guess what? Nothing worked. It would work every once in a while. I would make some really nice trades, and I thought, boy, I finally got it together, and I'm making money now. And then inevitably, I would give it all back, and I'd be right back where I started. I know this probably sounds familiar to a lot of you. It's very discouraging, and it's extremely frustrating because you don't know how much longer you're going to be able to last doing this. Now, my mentors, who are also specialists, they had seen how much I was struggling, and they took me aside. They took me under the wing, as I stated earlier, and they taught me what it really means to be a successful trader. And it's entirely different when I think other webinars or what you probably learned before. So let me share with you what they said successful trading is. The first thing they said, successful trading should be non-subjective. All right, so what does this mean? Well, how many times have you had an idea about a stock, about the market, whatever you're looking at, and you think it's going to go one direction, and you see someone on TV or you hear someone in a webinar or perhaps just a friend that trades with you thinks the exact opposite, okay? This is a method or a technique that's based on subjectivity. There's too much discretion. And that's why there's too many opinions, too many ideas about what's going to happen. This happens a lot with news because it's discretionary. And how many times have you thought that there's great news and you want to buy the stock and the stock immediately goes straight down, okay? That's too subjective. We want things that are cut and dry. And all of the rules and all the techniques we have in our methods are extremely simple and cut and dry. In other words, two traders who have taken my courses will look at a chart and know exactly what to do. They're not going to come up with two different scenarios. So that's the beauty of successful trading. It should be non-subjective, and two traders should come up with the entirely same scenario. Secondly, it should be consistent. Well, everyone says, well, sure. I mean, we all know that trading should be consistent. But I think a better way to describe this and to define it is to say it the opposite way. In other words, it should not be looking for home runs. Now, how many webinars, how many courses have you taken where they promise the world, where they say, you know what, you're going to make thousands and thousands of percent if you just follow the rules. Everything is right there. We've gone back 20 years and we've made hundreds of millions of dollars. It's just an amazing technique. And what they're doing is they're showing you how, they're swinging for the fences and they can hit these tremendous, tremendous home runs. But see, it's been my experience that any method or technique that is able to hit a home run and that's only reliant upon hitting home runs is just as easily able to give it all back. Once again, take this from firsthand experience. In fact, I knew tons of traders when I was trading on the floor who hit home runs. They made hundreds of thousands, if not millions of dollars in a short time trading these techniques. And not one of those traders, not one, has continued trading. Why? Because they've given it all back. See, those techniques that are based on hitting the home runs can just as easily give it all back. So that's not what consistent means. Consistent, therefore, is having an approach that is 2 steps forward, 1 step back. That is not swinging for the fences, and it's not going for these humongous gains, that knows that every once in a while you may get one, but that's not our goal. Our goal is just to have these nice, consistent profits add up. Instead of home runs, we're going for singles. And we teach you how to get those home runs if you like, but this is not our goal. So that's what we're looking for, consistency. I'm happy to say that all of our methods have a high level of consistency. They also stated that successful trading should be as simple as possible. So how many webinars or how many courses have you purchased where all of a sudden you get the rules or you get the description of how you're supposed to trade them and they are so complicated? There's 10, 20, even sometimes 30 rules, tons of indicators, tons of discretionary action you have to take, and you're thinking, boy, how am I going to implement this? It's just too complicated. I know I did. I remember I purchased a system that was so complicated, I had no idea how to follow it. And I knew after the first week, after I had spent thousands of dollars, and this was some 30, 40 years ago, that there was no way I was going to be able to trade this. If you look at the traders who've been trading for a relatively short time, this is 5 to 10 years, it's still relatively a short time. Most of their methods are very convoluted, they're very complicated. But if you look at the traders who've been trading 30, 40, even 50 years down the road, most of their plans have 3, 5 rules, maybe 6 rules. That's it. Maybe 1 indicator. That's it. They're extremely simple. So that is what has made them a successful trader. Not overcomplicating, but by simplifying your trading process. And all of our methods are extremely simple. And then lastly, successful trading should make you a part of the process. Can you imagine, in order to explain this, let's just say you're a brain surgeon. Can you imagine being right in the middle of an operation and then asking the nurse or asking someone else in the operating room, what do you think I should do now? Give me your opinion. Or can you imagine being an airline pilot, having hundreds of people that you're flying across the country, and then while you're up in the air, asking the co-pilot or the stewardesses to ask, well, how do I land this? What do you think I should do? Where do you think I should go? That is the way most traders trade. They'll get involved in a trade, or else they'll wait for someone else to tell them what to do. Go turn on the TV. What does that trading guru or that pundit think about the market today? Or even wait for the news. I can't do anything until the news comes out, so I got to wait until it tells me what to do. Or you have a ton of indicators where they must all line up, and you have to wait for them to tell you when it's okay to buy or sell. This is another way that most traders trade, and this is, I think, the #1 example, once again, because traders will take themselves out of the game and not be a part of the process. And there's a real basic reason for this, because once you rely on someone or something else to tell you how to trade, you've taken yourself out of the game. And the reason is because whether you know it or not, you've gotten off the hook. So in other words, if it doesn't work, well, you can always blame the indicator or the person that sold you the system or the signal service you go to on a daily basis. It's a great way to get yourself off the hook, to not take responsibility. But specialists take responsibility. They make their own decisions based off their own simple, non-subjective, consistent trading plan. And if it works, great. They only have themselves to thank. And if it doesn't work, well, they take small losses and they say, it's consistent, I still believe in it, and this was my mistake, let's go on to the next one. Remember, 2 steps forward, 1 step back. But specialists never rely on news events. They never rely on what someone else is saying. I mean, that would be, similar to a doctor watching a soap opera, a hospital soap opera, and watching the TV to wonder how he's going to make the operation. Okay, most specialists I know don't even look at the news, wouldn't even care what the earnings are. They don't care about those things. This is what will lead you to be a successful trader. Now, obviously, if you're investing, if you're holding long-term positions, yes, you need to know about earnings. You need to know about what's going on economically and cycles and stuff. But most traders that I know of and that take our courses are holding positions anywhere from maybe a couple of weeks, a couple of months, maybe even a couple of hours. So there's no need to focus on any of these things. I stopped focusing on news, on earnings 40 years ago, and I'm still here. So if it hasn't, harmed me, how can it harm you? Simplify your trading. Get rid of what my mentors called this useless noise, and that will lead you to being a consistent trader. It's not the opposite. They're not piling on more things onto your trading plan. It's simply taking that stuff off, and that's how you will become a consistent trader. So this is basically what we go over in our curriculum, and this is what we're going to be giving you 6 weeks of trading. Now, the first week I covered the basic philosophy, which I just shared with you right now, which is the foundation and the building blocks of stock trading. And in week 2, we begin our live classes where we start going into strategies. This is what the meat and potatoes, what everyone's looking for, the actual rules to stock strategy number 4 and stock strategy number 8. These are our 2 best strategies in terms of consistency for trading the stock market. In week 4, we cover a topic you've heard me speak about many, many times in my webinars, which is probably our most powerful trading tool, trend identifier. It's the PET-D. Week 5, we're devoting the entire class to option trading. I'll tell you a little bit more about that because we know we have a lot of students that say, Steve, I love your methods, but I don't trade stocks. That's okay. You can apply options to them, and we'll devote that entire class. And then in our final live week, we will talk about advanced trade management. This is another technique I learned specifically from the trading floor for keeping you out of bad markets, and then we'll put it all together with any final questions you may have. Okay. Now, let me just share with you some more information. Let's go into detail. Let's talk about the strategies, okay? Because that's what everyone wants to learn about. Let's talk about strategy number 4. Well, this is our most consistent strategy for trading stocks. And let me share with you some examples, some current examples. Here's MA. Now, looking at this example right here, someone would say, well, we're kind of headed sideways to lower. I don't really think I should be long this. There's no indication. The earnings aren't about to come out, and no one really is touting it with any of the major brokerage houses or the institutions. So I don't understand what the idea is to buy here. Remember, those are all outside sources. We don't listen to that. We only listen to the most important thing, which is a chart in front of you, the market you're trading. And what's it telling us? Well, it's saying that there was a buy signal generated right here, another one issued right here, and another one still issued right here. So you have a confluence of strategy number 4 buy signals. And nothing yet has happened until coming into June, the stock all of a sudden shot up and gained 9 points in the following 2 weeks, okay? Now, strategy number 8 is another great strategy. This strategy is designed for stocks only, and what it does is it doesn't happen all the time, but often we've seen that it captured these large moves that will take place in stocks, many times either a gap up or a gap down. For example, we look at this stock here, BBBY. Now, it's kind of going sideways to a little bit higher, and someone looking at this said, well, you know what? It kind of broke out, and it looks like it's just pulling back. Time to go long this. But according to the rules, all the full rules which we teach you in the college, you'll see that a sell signal was actually generated here. This was on the 16th, okay, just a couple of weeks ago, and the stock fell 5 points in 1 week. Once again, we know not everyone shorts actual stocks. You could have easily purchased puts or some type of negative option strategy. Now let's talk about strategy number 4, because this is once again our most powerful strategy in terms of consistency. It's extremely simple, and guess what? It has a total of 5 rules. I'm going to share with you 3 of them today. All right, so these are the three key strategy rules we talked about, and I'm going to show you a lot of examples on how you could have taken advantage of these 3 rules. Now, who exactly is strategy for? Well, it's for all students. So it doesn't matter if you've been trading 2 weeks or if you've been trading 20 years. In our college, everyone gets the basic format. See, we start out with these standard formats, and then we work out from there to meet your needs. So it didn't matter if you're an aggressive trader or you're a very conservative trader. Remember, our goal is to have you identify setups and then make your own trading decisions. The only way you can do that is by being supplied all the different variables and options. So what we do is we give you the standard core. Everyone gets the standard core, whether you've been a hedge fund trader or whether you just started trading a week ago. And then we work out from there so that you can be comfortable with it. We give you different options for entry, different options for stop placement, different options for exit, okay? It was initially designed for traders looking to catch quick momentum moves. I started trading this 40 years ago on the floor, and I was in and out of trades sometimes in a couple of minutes, but we've now have ways in which you can stay in the trade weeks, if not months, if you'd like. It's a pattern recognition strategy. So all we're trying to do is simply identify a specific pattern I was taught on the floor, and this is really the core of it. It sets up all of these really nice trades. All right, so here are the highlights. Once again, designed to capture quick momentum moves. Its intensity level from 1 being the most intense of all strategies where you can't leave your computer screen, and 3 the most relaxed where you can just enter an order and go to work. It's right in the middle at number 2, okay? It only uses one indicator. That's how simple it is, okay? And it's a very common tool as well. It works in any time frame, any direction, and any market. That's the beauty of strategy number 4, because it can transfer over so well into different trading environments. Now, once you become a member of the course, this includes the educational buy and sell indicators, okay? So this will generate on your charts buy and sell arrows so that you know when a signal has been generated. But remember, we don't want to give you and force feed you a signal. That goes against our philosophy entirely. These are simply here for educational purposes to check your work so that you know when a signal has been generated. Most of our students, after a couple of weeks or maybe a month or so, properly know how to identify a signal, and they don't rely on the arrows anymore because they can see right off the bat when a signal has been generated. Now, as always, we always strongly recommend that our members and students learn our strategies first, and the best way to do this is through paper trading. This is going to be part of the course. It's so important that you learn the entire process, and the only way to do this is by paper trading, because so many students lose money because they jump in too quickly. So we really stress that you paper trade. Now, some people paper trade for a couple of days, other people will paper trade for a couple of months. It's up to you. Our edge here is consistency. As I stated earlier, consistency simply means 2 steps forward, 1 step back. The 1 step back simply means that we know from time to time there will be small losses. That's okay. That's perfectly normal. Not every basketball player makes a shot. Not every baseball player hits a home run. Not every actor or actress has a hit movie or hit album. It's just part of the process, okay? It's just the ability to snap back and recoup those small losses is what makes something consistent. So that's what we're looking for. Okay, so let's talk about the indicators. Here's the only indicator you're going to be using. You've heard me talk about this before. It's the 50-period simple moving average. And we call this our buy-sell line, and I'll show you in just a few moments why we call it that. But this is such a powerful tool. We suggest all of our members, in fact, I would suggest this for you right now, to apply this on any chart you're looking at. I don't care if it's a daily chart, you trade daily bars, you trade tick charts, or if you trade monthly bars. It makes no difference. And the way we apply it is that if price is above, you should only be looking for buy signals. It doesn't matter if you're trading one of my strategies or one of yours. If price is below, you should only be trading short signals or sell signals, or else out of the market entirely. That's how simple it is, but that's how powerful. Go back and do your research right now, and you'll see how that could have made you a more consistent trader. I can almost guarantee that your losses, the majority of your losses, were because you were probably selling above the 50 and buying below. This is, every once in a while you will hit a nice top or a nice bottom, but over time, it's very similar to the slot machines. They give you this false sense of security that you think, hey, I'm doing okay, but over time you really have nothing to show for it. It's the same way with buying below the 50 and selling above. All right, so let's move on then. Let's move on to these 3 rules for strategy number 4. Now, this is for all time frames, so it doesn't matter if you trade daily or weekly or monthly, it doesn't matter. and you'll just simply reverse these rules for sells. But let's talk about buys. All right, rule number one, as we just stated, the closing price must be above the 50-period simple moving average. Now, if we wanted to, have a perfect world, we'd like to see all the bars from top to bottom not even touching the 50-period moving average, but be entirely above. But it's okay, as you'll see in a few examples later on, all we're really looking for is that the price closes. So you can actually have the majority of the bar below the 50 as long as we close above. It's a little bit more aggressive, but it's still a valid setup to go long. All right, that's rule number one. Rule number two, we are going to look to buy when we're above the 50, price closes above, and we have a price bar close in the top 25% of its range. All right, so if you take a bar, whether it's a candle, a standard open, high, low, close, a range bar, makes no difference. If you divide the entire bar by 4 separate but equal parts, divide by 4. If you close in that top quarter, anywhere in that top quarter, that's going to be labeled our setup bar. Now, there are 2 other rules we can't divulge because it wouldn't be proper to the people who are already in the course. But once you have a valid setup bar that has all the rules and requirements in place, you're going to enter to buy when price simply trades 1 tick above that setup bar's high. Okay, that's how simple it is. But we are not going to place a limit order below. We're going to only enter once we see that price trades 1 to 5 ticks above. Okay, it's up to you, your discretion. This is where we want you to be a part of the process. Some of our students like to enter the minute it trades 1 tick above. Others say, well, Steve, what if I enter 5 ticks above or 10 ticks? Give myself a little room. That's fine. We want you to be in charge. This is part of the insight we share with you so that you can feel comfortable trading it. We're not teaching, nor do we trade systems where the rules must be followed the exact same way every time. We're teaching and trading strategies. Strategies are 70% rule-based, but then they allot about 30% for discretion. And discretion does not mean, well, I feel lucky today, I guess I'll go long everything. No, discretion means using experience, insight, and just experience from seeing what the market has been doing from what we teach you to change the method to meet your needs. Similar to a quarterback calling an audible. He goes up to the line of scrimmage with a play. Everyone knows what the play is, and all of a sudden he's seen that the defense has shifted, it's changed. So the basic play is still you're going to be taking course, but he's calling out an audible, meaning he's shifting things a little bit because the environment has changed. The same way with our methods, their strategies. You can shift things, keeping the basic core in place, but just shift your exit, maybe shift your entry, maybe shift your stop placement to meet the environment changes. All right, so let's take it step by step so that you understand these rules. And remember, you can start applying these to any strategy, any method, and I really feel strongly you will increase your odds for consistency. But as always, the way we even tell our members in our courses, paper trade first so that you fully understand the process, okay? All right, step 1, price must close above the 50-period simple moving average. Obviously, if we were going short, we would look for the opposite. Price must be below the 50-period. So as we look at this chart here in Amgen, we see here, where is price? Well, price is above the 50. Are we going to be looking for a short? Absolutely not. We don't care what someone says in a chat room. We don't care about what the earnings are. If price is above, we're only going to be looking to buy. Now, we're not going to just simply buy at the market. This is not a strategy. It's just telling us what side of the fence to be on. That's why we call it our buy-sell line. All right, so you must plot a 50-period moving average. Now, rule number 2, we're going to look to buy when a price bar closes in the top quarter of its range. If this rule and the remaining other rules of the strategy are met, well, then we're going to label this our setup bar. So as we see here, we're looking at these bars, and this bar closes in the top quarter of its range. You see, you measure from the top of the wick to the bottom of the wick, all right? It's not from the open to close. That's not range. That's just the open to close range. The range, the real range, is from the top of the wick to the bottom of the wick, all right? That's the movement of the day. So if you close in that top quarter the way this example did, and all the other rules, which once again I apologize, I cannot divulge, it wouldn't be fair to the other members, well, that is a valid setup bar, all right? So rule number 2 has been met. Now we just go into the entry rule. We're going to enter to buy when price trades 1 tick above that setup bar, okay? And remember, this is discretionary. This is where you can use your insight. It can be 2 ticks, 3 ticks, 5 ticks. It's up to you. This is where paper trading comes in. But let's just say we put it up just a couple of ticks above. All right. A tick is just a unit of measurement for those of you who aren't familiar with that. So if the price is 150, 150.01 means it's up 1 tick. 150.02 is up 2 ticks from 150. Okay. So let's see what happened. Well, yes, the very next bar we traded there. Now remember, we did not say it has to close above the setup bar. All we said is that we need to trade above there. That's all we need to do. So as you can see, you would have entered to buy, and where did it close? It closed lower. It closed towards the bottom, right? This is where most students get scared. They go like, this doesn't work. I entered and look where we closed. We teach you where to place your stops. We teach you where to place your exits. We teach you that this is a consistent method. So just relax, because where most people would say, well, this isn't working. Look at the way we closed, and that guy in that chat room says we should sell this. Well, the stock gained 25 points in the next month. Did we follow any earnings? Did we follow any news? Did we follow any institutional report, what the institutions are doing? Did we look at the volume? Did we look at supply and demand, or support and resistance levels? Absolutely not. These are all different methods that in my 40 years have shown no consistency. The only thing we look for is a specific pattern, and we listen to what the market is telling us. See, we've never been trained to listen to the market. We've always been trained to listen to some guru, or we've always been trained to listen to some indicator. What we do at Specialist Trading and Pro Trader Strategies is we educate you on how to listen to the market, because that's the source of what you're trading. Wouldn't you rather take your cue from that than from someone who has no higher level of consistency than anyone else? All right, so let's look at some recent strategy number 4 trade examples using the same rules that I just shared with you. Remember, do the research. Go see if this could have helped your trading this past month or so. All right, here's an example in WYN, W-Y-N. This chart is basically going sideways the first half of May. Someone looking at this would say, no, there's no clear-cut path here. I don't want to get involved in a rangy market. Well, how do we know whether it's a rangy market or not? What side of the market should we be on? Well, we're using our new development here. This is something I developed with Pro Trader Strategies. These are our PTS Primo charts. I'm really excited about this because this incorporates all of our different techniques, all of our strategies, all of our methods in one educational trading platform. So all you have to do is simply click on the buy-sell line in the top left-hand corner, and you have different variables about what you want to view. In this case, we can either view a simple 50-period moving average and all the other 3 variables. Now let's click on color ribbon, and automatically the very bottom color ribbon is blue. Blue tells us that you should only be buying. Why? Because price is above the 50. So there's no need really to plot the 50 if you have the PTS Primo charts. All you have to do is have the color band ribbon on there. You automatically know whether you should be a buyer or a seller. See how simple that is? We've taken all the work out for you. We've cleared up your screen, and you're going to know, regardless of the market is going straight up or straight down, you just look at the color band, and it tells you what you should be doing. Now, it doesn't tell you where or when. We teach you all the rules in the course, but it tells you automatically what side of the market. So we already know that there's no range market going on here. We're in an overall uptrend. So the buy-sell line tells us the overall trend, and the overall trend by a color blue is up. So that means we're looking for bars that close in the top 25%, which are right here. This bar closes in the top 25% as well. It meets all of the other rules of the strategy. So a buy signal was generated on the 18th of May, where other people would have said, why would you buy this? It's just in a range market. And as you can see later on, this is where we're going to buy, 1 tick above. It traded there but closed lower. It makes no difference where it closes. We don't care as long as we're in. And 9 points in the next couple of weeks, okay? See how simple it is? Do we know what the earnings were? Do we know why it went up? Absolutely not. The only thing we listen to is the market. Now, as it went up, you have 9 points to work with. We teach you all the different exits so you can determine where you want to get out. Some of our traders like to get in and out in a day or so. They take a point and say thank you. Others will take 5, 7, 8 points. It's up to you. Remember, you're in charge. We're not going to tell you where to exit. We're going to give you all these different exit plans. It's up to you to decide which one you want to apply. All right, so after a nice 9-point gain in a couple of weeks or so, the market starts to sell off. This is where the chat rooms, the guys on TV say, well, Wynn had a really nice move, but you should probably sell it. It looks like it topped out. There's a bearish engulfing pattern right there at the top. It's also an evening star. I mean, this is a bad formation. We're probably going to come all the way down. And you know what? The institutions are selling this. We've broken support on the nice uptrend line. And finally, this trading guru on TV doesn't like the stop. All right. All outside sources. This is what makes traders lose money, by relying on these things that are no more consistent than anything else. What's the one thing we haven't been listening to? The market. And what is the market telling us? Well, look at the blue line at the bottom. Even though we've sold off 4 or 5 points, what color is it? It's blue. So it's telling you, you should not be selling this. You should be looking for more buy setups. And what do we find here? 2 buy setups. All right. They both close in the top 25% of the range. They meet all the other requirements. And so our automatic buy and sell add-ons generated 2 buy signals. Had you taken advantage of those? Well, you would have gone long the first one, and then if you wanted to buy more, you could have gone long the second one, another 5 points to the upside, okay? You see how the market told us, don't listen to anybody else. We're still in a overall buy mode because the color is remaining blue. Now that just happened this past month, actually the last couple of weeks coming into the last week of June here. Let's look at UPS. This is the chart we looked at earlier in the day, okay? All right, so we're looking at the PTS Primo charts, which makes everything simple for you. All you have to do is plot on a chart, and then once you do that, you click on the Buy Sell Line tab. All right, this is our green tab here, which has all our strategies, all our methods, anywhere from a Buy Sell Line to the actual strategies to the PET-D. Once we click on the Buy Sell Line, a drop-down menu appears and gives us all the different variables. Let's choose a different variable to view the Buy Sell Line. Okay, let's choose the background feature, and once you do that, it automatically colors your background, either blue or reddish orange. Now, if it's blue, once again, it's telling you should only be buying. A lot of our members like this method better because they will not see the blue color ribbon at the bottom sometimes. They'll miss it by focusing so much on the price charts. And so this way, if they see the background is automatically blue, they just know they should only be looking for buy setups. Okay? So we know now that UPS is a buy coming into June, the first week of June. We have a bar that closes in the top 25%. A buy signal is generated. We're going to buy 1 tick above. This was on the 9th, just a couple of weeks ago. And the stock gained 5 points in the next week. All the time, the background remained blue. And if you missed that signal, guess what? The very next bar also generated another signal to go long on the 10th. And that was, or I should say the 12th, and that was because it still met all the rules of the strategy. Let's look at this chart here in low, LOW, okay? This was April, May, and June coming into the last week here. Now someone's saying, well, Steve, those were all simple because, you know, the market's just kind of going sideways to higher. This is a little bit different though. How do we take advantage of this? Because we have, you know, a nice upward move, then we have a nice downward move. We have a lot of volatility going on, okay? How can the buy-sell line help us? Well, let's use another feature. Click on the buy-sell line, and our last, and this is a feature I'm really excited about, is called our fluid feature. So let me show you what that means here. If you click that on, all of a sudden you see that that line that is right here separating the 2 colors is simply the 50-period moving average. But anything above that is blue, and anything below that is red. So the beauty of this feature is that it gives you 2 advantages. It obviously tells you what side of the market to be on, but it also, these 2 advantages are, it tells you the momentum. In other words, if you have a nice upward sloping or a nice downward sloping trend there, that's telling you there's momentum. So you know that the signals may be a lot more valid as opposed to just seeing a flat sideways line, okay? And then secondly, you know when you're about to cross over onto a different color. So that it's time reference and also volatility reference. So while we were in the blue mode, well, we had a buy signal generated on the 17th of April that generated 5 quick points. That was a nice trade. As we continue forward, nothing else is generated until we get towards the last week of June here. And you can see two signals were just generated, which generated roughly about a 4-point gain. So where something originally looked a little bit too volatile, now in hindsight, we see, boy, we had some really nice opportunities there. And this is a perfect example of why I tell you the buy-sell line is so powerful. Because had you looked for buys all the way while it was going lower, well, look what would have happened. You would have lost money, most likely been stopped out. And by this point, you would have said, boy, this is terrible. Had you simply looked at this, once we closed for the first time below, well, that's telling you it's no longer proper to be looking for buy setups. We're only going to be looking for sell setups. This is the beauty of the buy-sell line, and we make it simple for you by having all this at one-click access on the PTS Primo charts. Now, a lot of traders say, well, Steve, this is great, but I intraday trade, or I'm an investor. It makes absolutely no difference. All right, here's a weekly chart of Apple. All right, we applied the background feature of the buy-sell line. We knew back as far as November 2016 that Apple should have been purchased, looking at weekly bars. Okay, a lot of people were just taken off guard how strong Apple was. We knew all the way back to November 2016, okay, that this should only be viewed as a buy on a weekly time frame. There's a strategy number 4 buy signal in November, beginning of November, and 45 points all the way coming into May of this past year. Now that's a weekly chart if you like to swing trade or hold on to positions longer. What if you're an intraday trader? Well, here's Tesla, a 15-minute chart using our fluid buy-sell line. All right, that's a little bit more advanced because as you can see, we were originally above the buy-sell line and then we went below it. But as we can see, we still have a nice upward slope, and on this bar, we actually closed. We just closed above it on a 15-minute time frame. So this is still a valid setup. You could have entered there and it was quick 13 points in the next day or so. Lastly, let's look at a 5-minute chart. We're using the color band ribbon here at the very bottom. That's if you want to keep your screen clear and don't like the colors, you can use the color band ribbon on the bottom. And as far back, this was on the 9th, we knew way up here that you should only be looking to sell Google on a 5-minute time frame. Why? Well, look at the color band. It's reddish orange. So you don't want to be buying anything. Aren't you glad that you didn't buy anything all the way down? 55 points. So as you can see here, the beauty of strategy number 4 is that it can be applied to any time frame. Now, these strategies work great with stocks. We just gave you 3 of the basic rules to strategy number 4. But guess what? A lot of our members like to trade other markets. A lot of our members not only trade stocks, but they also trade intraday futures, or they invest in currency pairs. Well, that's okay because they work on ETFs, futures, Forex, commodity market. You can transfer them over just as well. For example, here's the euro dollar back in May. Once again, someone looking at this would say, Steve, how can I go long the euro dollar here? We're in a range, you know, and there's some economic news coming out about the euro, and I don't want to really do anything until that news comes out. The market's pretty much just basically flat. No, it's not. Look at the color band ribbon. What is the market telling you? The market is telling you that the overall trend is up, and that if right off the bat, you know what side of the fence you should be on. You should be looking at things from a buyer's point of view. Now, if you want to trade one of your strategies or one of your methods or one of ours, it doesn't matter. You will have a higher level of consistency if you're in sync with the overall trend. So as a coincidence, what do we have here? A bar that closes in the top 25% of its range, and a buy signal is generated. Now remember, this is a currency pair. The same rules apply. We're going to buy 1 to 5 pips above. And as you can see, once you would have purchased there in May, coming all the way into the first or second week of June, that was 350 pips, or I should say, yeah, 350 pips or $3,500 per contract you could have made. Now, if you wanted to get out with only a 50 pip gain, that's fine. If you wanted to get out with 100, 200, it's up to you. We show you how to take advantage of that so that you'll feel comfortable. Some of our traders like to be in and out quickly. They don't want to hold overnight positions. That's great. We show you how to do that. Others still like to, go for as much gain as possible. That's great. There's no one right or wrong answer. The only wrong answer is when you listen to someone else tell you exactly what you should be doing, like a system or like some guy in a chat room. We don't believe in that. Remember, that is the number one reason why most traders fail. You're giving your power away. Here's another example, a 10-minute chart of the E-mini futures. We have a lot of intraday futures traders at Specialist Trading and Pro Trader Strategies. What's it telling us on this 10-minute time frame? We should only be a seller. Why? Because the background feature of the buy-sell line is reddish-orange. There's no way we should be buying, regardless of how low we think it's oversold, regardless of what indicator is saying, boy, we've never been this oversold before. You've got to buy for a bounce. Because if the overall trend is down, the odds are in your favor that it's going to go much lower. Look at all the sell signals that were generated on a 10-minute time frame. Now we're also going to give you 3 extra bonuses in this elite college course that we're starting just in a few days from now. We're going to talk about option trading, as I stated earlier. All right, we're going to have an entire class devoted to applying options. And we're going to have this taught by an experienced and professional option trader. You've seen him speak before. He gives webinars on Pro Trader Strategies. It's Eric the Wolfman Wilkinson. He's been trading for over 20 years. He's been featured on CNBC, Fox Business News, and other financial networks. And he was also a floor trader on the options in the options pit. So he comes with tons of experience. So if you're an option trader and you say, you know what, I love these strategies and methods, but how do I trade them with options? Because I don't buy or sell stocks. That is the class you want to be attending. One full class is devoted to option trading with Eric Wilkinson. We're also going to have another bonus where we feature the ATM. Now, the ATM is another proprietary method I learned from trading on the floor, and it stands for Advanced Trade Management. Now, how many times have you seen this before? You've had a strategy that you really like or you feel comfortable with, and it works perfectly. As we look at this example here, this is actually one of our strategies at Specialist Trading. And you see this in every signal works. Every trade's a winner. And you think, boy, I've got it made. Everything is working. I'm back on track. I think I found the Holy Grail. I know how to make money now. I'm going to retire in a couple of years, okay? And then a week or so later, the same strategy produces nothing but losers, okay? It's very common. And this is an actual strategy, one of the strategies we teach in our courses. It's not your strategy that is faulty. It's just because it worked before. It's just that it's out of sync with the current market conditions. Well, the ATM tells you what the market conditions are. So you know whether you should be trading or not, whether your strategy works in those current market conditions or not. This is a great, great tool. It's so powerful that we do not have a special course, an individual course for the ATM method. We don't sell it separately. It's only applied in our colleges. Those are the only people that get to have access to it. And then lastly, our third extra bonus is the Pet D, all right? This is the creme de la creme. This is our most popular trading tool. It's not a strategy, it's not a system, it's a trading tool at Specialist Trading and Pro Trader Strategies. It stands for the Primo Early Trend Detector, only because I developed it. But I basically learned this floor trading technique some 40 years ago on the stock exchange floor. And we used to call it the formula because it was something you had to actually calculate by hand. But now what we've done is, with the help of high-speed computers and with the help of programmers, I developed it with Pro Trader Strategies into a color bar algorithm. So it's proprietary. We're not divulging all the rules because there are institutions and some other groups that would like to actually license this out. So we're keeping this in-house for the moment. But we've taken all the hard work so you don't have to calculate this every 5 minutes. And all we do is we color the bars either green if you're in a short-term uptrend or red if you're in a short-term downtrend. Now to look at this in a real-world scenario here, here's Aetna. Look at this nice uptrend in Aetna. The only trouble is most people will get into this once the trend has already started and think, well, it's met all requirements. What I know a trend is, so I'm going to buy here. And the minute you get in, go straight down, right? Doesn't that look familiar to a lot of the trading you may have done? It does to me. That's the way I used to trade. I would always get in right at the top or get out right at the bottom. What if there were a tool that were an early warning device? Not telling you where to buy, where to sell. It's not a strategy, but just giving you an early warning to tell you when the trend is going to change direction. Well, that's what the Pet D does. We give you the add-on, and plus with our special platform here, all you have to do is just simply click on the tab and it changes the colors automatically from green to red. So as you can see here, the beauty of the Pet D is that it tells you which direction you should be trading. Once you know the color of the Pet D, you can apply any strategy to that direction. Now remember, the buy-sell line, that tells you the overall trend. The Pet D tells you the short-term trend. So if you have those two together, they create a really strong synergy, the overall and the short term together. I'm going to show you that in the course, okay? Now here's a great long-term example, because we know that some people still like to trade long-term, or they want to find out how they can apply this to their long-term IRA accounts. Well, look at this example right here. Here's the way we apply this for long-term. Here's the PET D applied to your standard open, high, low, close bars. We have some green bars, we have some red bars, but the basic rule is for long-term, when you have 3 consecutive red bars, that signals a trend change, all right? So if these are longer-term bars, that's telling you right there that that is now a full-fledged downtrend. And look what happened, okay? So let's apply this then to the spiders. This is a monthly chart of the spiders. That's the ETF that represents the S&P index. So it mirrors the S&P index, and we're looking back some 20 years to 1997, middle of 1996. Now, as we look at this chart, we see here all the peaks and valleys that have happened in the S&P index, okay? Everywhere from the straight up market till we hit the dot-com crash in 2000, and then we went straight down. We slowly made all the gains back until we hit the banking financial crisis in 2008, and then we had the nice crash there, which started the Great Recession. And then we've been slowly inching back for the last 7, 8 years, and there's a lot of question marks. When is this going to end? We've been going up for quite a while now. All right, even though it doesn't seem like it, we've been going up for a long time. How are we going to know when to get out? Here's where the PET D comes in as a great long-term tool. You simply click on the PET D tab here, as you can see at the very top, and it changes the color bars. Now remember the overall rule. 3 bars, consecutive bars of a different color will initiate a trend change. So as we can see here from 1996-97, we had all green bars. We had a couple of red, but remember we're looking for a total of 3 red, and so we remain long in our IRA or in our investments until this point right here. 3 red bars in mid-2000. Had you taken this advice then, you would have missed the majority of the dot-com crash and all going into 2003, middle of 2004. Once you saw 3 green bars in mid-2003, you're back in the market. Okay, you can invest in whatever company you want, you can buy ETFs, whatever you like, and you're back in. All the way to 2007 and early 2008. 3 red bars. You would have missed the entire financial crisis going into mid-2009 because you're out of the market. The PET D kept you out. Okay, then in late 2009, 3 green bars. So now we're back in the market. We can invest in ETFs, in anything we like that has to do with the market. And until we get 3 red bars, consecutive red bars, we have remained in the market the entire time. Wouldn't you like to know the next time we get 3 red bars? And you could possibly, not guaranteed, but possibly keep you out of a nice crash that we haven't experienced in a good 7, 8 years. This is the beauty of the PET D, which is also included in the course. We give you the add-on, which changes your bars from green to red. And if you have the PTS Primo charts, it's just as simple as clicking on the tab up here, the PET D tab, and they automatically change the colors for you. So let's review the curriculum. Remember, 6 weeks of solid information that's taken me 40 years to accumulate. Hopefully, we can lessen your learning curve so you don't have to wait 40 years to really understand this. You can get it all in 6 weeks, anywhere from our strategies, the PET D, option trading, to advanced trade management. Now, we also are going to throw in an email service. Now, remember, I know that signal services can be turned into a crutch where people will just rely on this. But for a limited time, we will furnish you with signals so that you know what to look for. We will email you high probability signals, not for you to blindly take the trade. We don't want you to trade them, but we want you to watch them to see how they unfold and to see how that trade could have taken place. For example, here on the 30th, less than a month ago, a buy signal was generated in WHR. Okay, we tell you where the signal is, where the entries, the stops, and all the information on the basic format. And as we look at the chart here, we see, well, we have the standard buy-sell line color band ribbon plotted, and it meets the rules there. So this is how you can check your work. Okay, now I see why, because the color band ribbon is blue. Okay, and we close in the top 25%. It meets all the other rules that we teach you in the course. But let's say you're still not convinced. Let's say you know what, I'm still a little bit weary about taking this. The market doesn't feel that strong to me. Why would I want to go long this stock? This is where we would suggest clicking on the PET D and then changing the colors. If that signal is colored the direction where you want it to go, in other words, we want to go up because it's a buy signal. If that bar is colored green, that's a double confirmation. That means that you have all the consistency of the strategy combined with the consistency of the short-term trend all in sync. It doesn't matter if all the bars before were red, as long as this bar is green, you have a high probability setup there. And look what happened, 18 points in the following 2 weeks. So not to guarantee that they're all going to be winners, but this is just the consistency we talk about. Now, you could have taken a couple of point gain. You could have taken all 18 if you want. It's up to you. If you go to my website, specialsttrading.com or Pro Trader Strategies, you'll see tons of testimonials from people that are first-time traders to actual hedge fund traders that have been taking our courses in colleges. So it doesn't matter your expertise level or the level of experience. Everyone gains from these very consistent methods. So let's recap before we go to question and answer. Remember, you want successful trading to be non-subjective so that you have a clear-cut idea. You want it to be consistent. You're not swinging for the fences. From time to time, you will have home runs, but it's more of a two-step forward, one-step back approach. It should be extremely simple. I've just given you 3 of the rules. You've seen how well it works with just those 3 simple rules. We only have a couple of more left in most of the strategies, and should make you a part of the process. We don't believe in chat rooms. We don't believe in tons of indicators or following used, because that's a crutch where you take outside information to help make your decisions. Everything you need to know is right in front of you. Okay, so here's our Elite Stock Trading College. Remember, you have to take advantage of this quickly. We're starting the classes on Friday. We're going to be starting on Friday, 6 weeks, so you got to get in right now, and we have a great offer for you. But remember, if you do not take this course, you're going to be stuck, because the class is going to start, and a year from today, you will probably wish you would have become a member, because you're going to be sitting there a year later and saying, gosh, I am worse off than I was a year ago. Why didn't I take that? That was a great, I could have done so much better in terms of being a consistent trader, where I'm just still struggling and I'm worse off than I was a year ago. So if you combined all the information we're giving you, it would cost close to $10,000, $11,000. We discounted the price down to $5,000, but then we're dropping it even more down to $44.95. And this includes payment plans. So if you can't come up with that lump sum, don't worry. You can have a small deposit and be up and running in the class in a couple of days, okay? This includes 1 year of trade signals. This is where we email you the signals. But we're not stopping there. We're going to, make it a little bit easier for you as well. We're throwing in another bonus. We're going to throw in the PTS Primo charts. Remember, I just developed this with Pro Trader Strategies. I'm really excited about this. It has all of our methods, all of our buy-sell techniques and features included. It's the trading educational portal you have been searching for. And what we're offering is the buy-sell line, strategies 4 and 8, and the PET D with 1 year of real-time charts, of real-time data. Now, this usually will cost you close to $900. We're dropping that all together. In fact, we're throwing it in free. You're going to get our new platform. In fact, all the slides you saw today were generated off of the new platform, the PTS Primo charting platform. You're going to get 1 year of live data, all the strategies, everything we talked about on the platform included in that price. So here's how to take advantage of this before we go into question and answer. Contact my sister site, Pro Trader Strategies. They handle all of my courses and all of our discounted pricing. You can call them directly at area code 310-598-6677. And I would suggest that because you can talk to one of their trading consultants manning the phones, and they can work together and put together a personalized payment plan for you. So with that, you'll be able to be up and running, and all you have to do is just put a small deposit down, and you'll be up and running as soon as possible. Now, that link you see there at the bottom is the link you would take you up to the sign-up page, but it's not live. So if you want to have a live link, just go to the chat box on the far right, and a live link has been posted, and it will automatically take you to that page to sign up or for more information. But you must take advantage of this quickly. We start classes, live classes, this Friday, okay? Now, we keep our classes to a minimum, so we're just about at that top level, so we have some few spots open. If you're interested, you have to take advantage of this now. Okay, I'm going to keep this information up here so you can contact one of their trading consultants with the phone number, and I'm going to open up the question and answer page. And thanks so much for holding off on any questions. DT, hello, he asks, if the stock trades above the 50 moving average today for the first time in a while and it closes in the top 5%, could that be a buy signal? Well, it could be, but remember, there are two other rules that need to be met. And I can't give them away. You know, what I've basically given you is an appetizer here. But if I gave it away, I would be giving you a free meal, you know, and I just can't do that. It would be fair to all the other people in the restaurant if I said, okay, you asked for everything, I'll give you a free meal. Just don't tell anybody. That's not fair for the people who are already signed up to take the college tomorrow and will get all the full rules. So to answer your question, that may be a signal because those are all the rules we talked about. But it doesn't mean it is necessarily. It still has to meet the pattern and the other rule we talked about earlier that we can't divulge, okay? Remember, the strategies are extremely simple. You know, someone is asking, are these the same rules in all the strategies? Absolutely not. Strategy number 8 is not a pattern recognition strategy. It's a indicator-generated strategy. It's based off of what an indicator is doing. We teach you all the rules to that. We also supply you with the automatic buy and sell arrows, but we'll teach you all the rules, but that's entirely different. We're not required to do the same things we are with strategy number 4. I just shared with you 3 of the rules to strategy number 4, though. That's our most popular strategy. And we go into detail what all the rules are. Then we share with you how to apply options. Then we share with you how to apply the PET D. We share with you all the things I've learned from the floor that help to make you a consistent trader. Then we reveal the ATM method, which is designed to tell you which environments works best for your strategy that you're currently trading. And we work over and give you homework assignments so that you actually know what's going on. This is a full college. It's not going to be just something we give you, you know, blindly with some disc and say, learn the stuff, good luck, and just contact me with any questions. I take it with you every step of the way. We devote a lot of attention to really teaching you how to trade. As you've seen in this last hour of the webinar, I give a lot of stress on making sure that you understand it because ultimately I want you to make your own trading decisions. So there's a lot more questions coming on basically on the same thing. Is this going to be applied with another strategy? No, entirely different rules. Amika asks, hello, Amika says, are the rules automatically generated or will you have to detect them from the chart? I thought there was the 25% rule on the chart. Hi, Amika. Amika has taken some of our courses before. We want you, as I stated, to learn the rules so that you don't have to rely on the automatic buy and sell signals. So they will automatically be generated, but they're just there for educational purposes only, okay? Ultimately, when you know a basic format has been generated, then you can apply that 25 to 30% discretion. You can decide for yourself, say, okay, this is the basic format. This is a buy setup. Now, the basic format of the buy calls for me to buy here. But you know what? I'm going to apply a little bit of discretion. Steve shared different entry places that some people like to have. He shared with me about 3 to 5 different ways to enter. So I'm going to decide which one I like. Or maybe I've come up with something else through my paper trading, and I feel more comfortable with that. That's fine. As long as you're not disturbing the standard format, that's okay. But if you say, well, I have the standard format, and then this chat room I go to with another website, this guy says to wait for the earnings. Well, that is not in any way applied to any of our methods, earnings or things of that nature. So that is not something we would say is, you know, something to use in terms of your insight. That's an entirely different offshoot, which we don't encourage or promote. As long as it's something that we talk about in the college that is specifically okay to apply, you know, and questions and answers, we go through all these different variables, then sure, by all means. But if you say you want to add some convoluted indicator or a news event or what the institutions are doing, those are in no way covered in the course. In fact, as I stated earlier, those things will keep you from being consistent. So you're always allowed 25 to 30% discretion, but the standard format is generated on the buy and sell arrows, okay? Good question. Remember, classes start this Friday afternoon. They are live classes. One of the things I forgot to mention, with myself, 40 years of experience as your mentor. With Eric Wilkinson, the option trader, he comes over with 20 years. So you have over 60 years of trading experience at your fingertips here to ask questions, to have some people mentor you so that you really know how to do it properly, okay? I don't think you can get that anywhere else. Someone who's been trading with a website for maybe 5 or 10 years, that's not a real guarantee. You have close to, or I should say, not close to, but like at least over 60 years. I was going to say 70 years, but at least over 60 years of trading experience. And this is what you need in order to get you on the right track, okay? And you have direct access with us through email correspondence. So you can, anytime you have a question, you don't have to wait for the next class to ask me with an email. Also, once the course ends, you can continue asking us questions with the email. So a year from now, after you've taken the course, if you have another question, you can still email me, because once you're a member of my courses, you're a member of mine for life. So you can always ask me a question. Okay, so remember, contact Pro Trader Strategies. The class is filling up. We only have a few spots left. You have to take advantage of it soon because the class starts on this Friday. Now, asking how many days per week for the 6-week course. It's 1 class per week because we give you a lot of information per class. And I don't want to boggle you down with too much information. There's a ton. Each class lasts anywhere from an hour to 2 or 3 hours. We stay as long as you want. But there's tons of information in each class, okay? So I give you a homework assignment, and then we cover over everything else. We review it. So there's lots and lots of information. So that's why we only have 6 classes, but we have 1 a week, okay? And they're live classes, so you can ask questions during the classes, okay? I strongly, strongly recommend and suggest that you contact Pro Trader Strategies. Remember, they can devise a payment plan for you. So with a small lump sum, you can be up and running, you know, and you can be in the course in a few days, okay? So copy down this information, most especially copy down the phone number. And remember, if you wait to see this recording once again, you may miss the detail. The class may be closed. So you have to take advantage of it quickly. If you want to watch this, request a link, but you have to make a decision very quickly or else you miss the first live class, okay? As we conclude here, I hope you got something out of this. Remember to paper trade those 3 rules. To get all the information, come to the Stock College course, which begins on Friday. And I look forward to all of you becoming students of mine in the new Elite Stock Trading College. Thank you so much. I hope to see you there on Friday. Bye-bye.